Good morning, ladies and gentlemen, and revolutionaries. Welcome to the Fireside Chat. I guess we're calling it a chat because we want it to be a bit more up close and personal with our two distinguished guests this morning. And I'm really pleased. It's quite a coup we've got them. We're in for a treat here because on the stage with me this morning are two great private capital revolutionaries in the making. Matt Truman and Mauro Moretti. I say in the making, they've already achieved quite a lot, but you do get the sense with these two that the best is yet to come. They've kindly offered to share their insights with us this morning. And Mauro is the founder and managing partner of Three Hills Capital Partners. And Matt is the founding partner and CEO of True Capital. I will let them tell about their firms in a minute. But I know you're probably asking yourself now, okay, Scott, why do these guys qualify as revolutionaries? Well, to back up my claim, I did a bit of research on the key characteristics of great revolutionary leaders. And while we don't have time to go into the details right now, let me just say that they have more than a few things in common with Che Guevara, Mahatma Gandhi, and Thomas Paine. Namely, they're visionary and energetic. They have ideas and are not wasting any time in putting them into action. They're passionate about what they do and what they believe in. And they're innovators in a number of ways in making their own particular brands of private capital excel. And it's this last point that we'll drill into this morning, the revolution that we can make in the industry by innovation, with Mauro and Matt illuminating the subject through their own ideas and experience. Many of you have heard already this morning Helen's excellent presentation and others about revolution or evolution. I won't belabor the point, but you've heard about private equity 3.0, and maybe we're on private equity 4.0, not at this point, I'm not sure. But it's the idea that as the industry gets more mature and more capital comes into it and gets allocated to it, the easy wins are harder and harder to come by. And we really have to raise our game in order to get to the next level and compete more effectively. The first progressions had a lot to do from going from financial engineering to delivering real operating value add. Sector focus was embraced, and with it the ability to deliver true industrial insights to create value. Overall, the trend has been one from generalists to specialists, either in terms of knowledge or approach. But it's not just in the tweaks to strategy and approach where we can innovate. In fact, it's also around firm building, culture setting, talent management, technology. All of these things can elevate operations, make them more robust, and ultimately deliver better results. So now for some context, I think you should try to understand a bit about the guys' strategies and firms. So I've asked them to give their elevator pitch since we're so pressed for time. And can we start with you, Mauro? In terms of, you're the firm, introduce the firm and the strategy.
Yeah, thank you, Scott, and good morning, everybody. So we have been providing for the last 10 years a capital solution to mid-market entrepreneurs across Europe. And you would probably ask what there is revolutionary about that. But I think the way we approached the strategy from day one was very different. We thought that there was an opportunity in the market to go and pitch very successful mid-market entrepreneurs which are looking for capital with basically two toolboxes, the one from credit and the one from private equity. Historically, I actually come from private equity, from traditional buyout, and the idea was going with a very tailor-made approach to an entrepreneur, and of course trying to give him, let's say, a financing solution which was smart for him or her because they didn't want to dilute themselves, but at the same time provide the kind of soft services that a private equity house would provide in a typical buyout, supporting on the board, finding M&A opportunities, help the CEO and entrepreneurs that for the first time open the capital to an institutional partner to basically upgrade the management structure, bring on board the typical, let's say, stock option plans that in every private equity deals we have. So this kind of, let's say, cocktail of credit and equity has been at the base of our development over the last 10 years.
Excellent. Thank you. Matt?
Morning, everyone. I'm very humbled to be sitting in front of you. True is a retail and consumer sector specialist investor. We write checks of between 10 and 40 million pounds and EVs of between 10 and up to 75 million. Our investment strategy is very simple. We invest in business models that are fit for the future of the retail and consumer industry. How do we know the future? We decided alongside our PE firm to build our own innovation lab. That innovation lab is 6,000 square foot in Victoria. It attracts more than 2,000 applications from 38 countries. And that gives us a window and a uniqueness because it enables us to see everything from young startup all the way through to Walmart. That innovation hub is the epicenter of our business. It forms the fulcrum of what we call our live network. And our live network spans startup innovators, leading industry partners. We have strategic partnerships with people like John Lewis, Morrison's, TJX in the US, Woolworths in South Africa, and so on, all the way through to our private equity portfolio and our investors. Now, why is that relevant? Well, it's relevant because actually if we can drive the interaction of those stakeholders, of that live network, to create reciprocal advantage, it gives True a unique perspective from startup to Walmart. It gives us a unique knowledge, a unique flow, and on the basis of that, we can therefore invest our investors' capital in the right deals that are fit for the future. And I think it's that perspective that's unique about our business, and the fact that, apart from being in our bedrooms in 2013, I've never been in private equity before.
Thanks,
which I think is quite revolutionary.
Thanks for that, Chats. And now I'd like to move to some Q&A, and we will give a chance for the audience, so think of some good questions for these guys in a minute. But maybe I'll start with you, Matt. You've clearly put a lot of thought into the business model and the platform that effectively creates this dedicated ecosystem that supports the strategy. But can you comment on some of the key elements of the platform and how they benefit sourcing and value creation?
Yeah, so Paul and I, as founders, have thought very hard about actually what the management teams of our portfolio companies will need to accelerate their business in the new world, given such significant change in retail and consumer. As a consequence, building that live network has meant that actually bringing together startup innovators, leading industry partners, our portfolio companies, and putting them together has enabled us to create value both in terms of deal sourcing, origination, and actually during the deal. Now, let me give an example. In the pursuit of the Cotswold Company, which is a direct-to-consumer furniture retailer, completely online when we acquired the asset, it was a process with an advisor. It was going to be a pretty tasty auction. It had profit. It was growing fast, pretty unique in some e-commerce companies. And we were able to fly one of our live network from Chicago, 7,000 miles, to see the two entrepreneurs in Norwich and convince them that actually our network was much more relevant to add value to them. At the same time, Paul and I, having told the entrepreneurs our story, having built our business from our bedrooms in 2013 to more than 200 million today, after doing that, they were able to come and see our innovation hub. We were able to show them immediately 6 or 7 technologies that were immediately implementable and immediately value-creating for those entrepreneurs who we were looking to partner with. That is all pre-deal. That is all convincing them of the value that we could generate. Post-deal, clearly, that particular furniture billionaire, who's probably the second most famous, definitely one of the nicest billionaires I've met in the furniture sector, he was able to take a position on the advisory board, open up global supply chains, and this is a 30 to 40 million turnover business, predominantly UK-based. Now, in terms of that added value, some of those young technologies have also been implemented. If you take that entire vertical approach, that is ways that actually have benefited sourcing and have benefited value creation during the life of ownership, and of course, will hopefully benefit on exit.
Thank you for that. I guess what strikes me as somewhat revolutionary about your strategy, Mauro, is you identified early on an underserved segment and built a purpose-built firm to fill the gap. Can you elaborate on that journey a bit for us?
Yeah, I mean, it's interesting when I received the invitation about talking how innovation can drive a business model. For a new, let's say, company in asset management, I guess that probably innovation is the only reason to exist, because I mean, before we were hearing, from different very smart people that the industry is very mature. So to come out with something that makes sense for the LPs to allocate, you need to innovate. Otherwise, it's better that you don't do that. So from the beginning, we thought that we needed to be innovating, not just on the business and investment strategy. We, of course, thought that there was a dislocation, there was a space in the market that back in, I actually started before the Lehman and private debt, fashion. Especially right there was an opportunity, which of course today after 10 years give us a first mover advantage. But at the same time, we wanted to create something innovative on different aspects. The branding of the firm, in order to be, let's say, progressive, and we thought that would have been in the long term a very interesting ingredient in the recipe to attract talents, because more and more in the next 10, 15, 20 years, we will compete with other very, let's say, smart and rewarding financially occupation that give also other soft values to people. And so from day one, we thought that was one element of innovation. And the other one was how we, composed our LP base. So from the beginning, our idea was, of course, the institutional capital is important, but maybe there is also a source of capital if you want to go and speak to entrepreneurs, which could be very relevant and a value added, which is why we pitched a lot of big family offices and industrial holdings to say, come on board, our product serve people similar to you, and they actually loved the idea to do that. And today it's our main source of deals and origination. I think similar to what I was saying before, you also need to create an edge on how you originate your pipeline. In our last 10 years, we have worked in one transaction with an advisory board. All the other transactions were one-to-one. And maybe I can give an example, pretty funny, which is, 6 months ago, I had the baptism of my daughters in Rome, and one of our family office investors came as a guest. And at some point after the lunch, he said, listen, I have actually an entrepreneur based here in Rome, which I think would be very interested in meeting you because he's looking at acquisition in America. So 5 p.m., we go there, we have a coffee. 4 weeks later, we were in exclusivity. Today, we are in confirmatory due diligence. Let's see what happens in the next 3-4 weeks. But I think that's kind of the way, mainly in UK, Spain, Italy, which are our three core markets, we originate. And I think that was the idea from day one.
Yeah, excellent. Matt, I suppose one of the challenges for you is getting the whole ecosystem synchronized and working towards common goals. Can you talk about maybe incentivization and how you accomplish that?
Yeah, so the idea of common goals and incentivization actually likens itself to this idea. We use the terminology reciprocal advantage. So what does that actually mean? It actually means all of those stakeholders that I've talked about interacting for mutual benefit with True at the epicenter, benefiting from all the knowledge flow, contacts, and ideas that come from that. Let me give you an example. When we acquired Ribble Cycles, which is a direct-to-consumer brand very similar to Canyon, a little bit smaller, hopefully going to be a bit bigger in the future, that business wanted to test bricks and mortar. We didn't know the answer. We'd never done it before. And so we partnered with one of our innovation hub partners, Land Securities, the FTSE 100 partner, to test bricks and mortar in Cardiff, 48 million people going through it a year. And the mutual benefit that's created is that Land Securities get to put a highly differentiated, completely unique brand, in this case next to the Apple Store at Christmas, so it's not empty, and we get to test real estate at a fraction of what the market value would have been. Now, the benefit for management teams and investors are obvious from a financial cost perspective. The benefit for us was testing, actually, is that a broader rollout theme? Should we be thinking about it for other portfolio companies? And on the back of it, Land Securities then came to our hub and said, well, actually, I need some data technology to actually measure the impact of that. And two of our data technology businesses in our innovation hub are now implemented across Land Securities' 16 billion of assets. So you can see how that reciprocal advantage brings commonality of goals, even though fundamentally the difference in core goals between Land Securities, Ribble, and underlying startups are very, very different. It also enables us at True to actually deliver our common goals, which in simple terms are obviously industry insight for our partners, hopefully very, very strong returns for our investors, great deal flow and value add to our portfolio companies during that, and of course acceleration for our startup innovators.
That's great. I'd like to switch to culture now. I think it was Peter Drucker who made the saying, came up with the line, culture eats strategy for breakfast. And Mauro, you've been a true revolutionary in some aspects of culture setting and workplace innovations, I would say. Could you share with us some of the more progressive and enlightened features of life at Three Hills?
All right. I mean, it's difficult if you don't come to the office to really understand it. But so, I mean, I think one of the ingredients, as I mentioned before, was from the beginning creating a workplace and an environment which really incentivize entrepreneurship and would bring to the table some soft values which the founding partners believe very strongly. And so today, if you come to our office, it seems more probably a West Coast USA environment than a typical, let's say, financial institution. People write on walls, and I think the interesting balance was from the beginning, trying to be progressive, but also very institutional. Because that's the challenge, right? Because if you want to grow and scale your business, you want to be also very institutional. And I think that's the challenge every day, to not look odd and actually look edgy, but at the same time very institutional vis-a-vis the LPs, how you communicate, how you run your investment committee, how you run your due diligence. So that's why over time we have populated the team always from people coming from blue chip names, from credit or private equity, but people that wanted to be more entrepreneurial. Yeah. And some other examples, we run all our communication on Slack. We have like chats on fundraising, on HR, on every portfolio company, what happens on a daily basis. So the whole team, because we have also some colleagues in Luxembourg and in due course maybe also some other regional offices, it's important that people glue and stay on top of things. And then we produce some olive oil also as a company, which give to all the people who work with us during the year.
You didn't talk about the massages and the...
No, there is not that.
I got the 5-minute mark a while ago from Tim, so I have a lot more things that I'd love to talk about. But are there any burning questions from the audience that you'd like to pose to the revolutionaries on stage? No?
We've shocked the audience.
Okay, a couple more from me then. Matt, you deal in the world of brands and the IP of consumer behavior. So in the sense that LPs are consumers of funds, I was wondering if you had any advice for the GPs in the room on brand establishment and how that's applied to maybe their interactions with LPs.
I think what I would say firstly is we love brands at True. We genuinely believe in the emotion that comes from a good or a bad experience with a brand and the lifetime impact that can have of that bad experience. And we try to apply that to our relationships with our LPs. If I think about the classic value proposition in retail of price, convenience, quality, and service, from the very get-go, one of the benefits of not being in private equity before is actually we didn't have many friends and we certainly didn't have many investors. So trying to convince people that actually our model was interesting, we adopted a very different approach, which was to invest in our LP relationships very early, far earlier than perhaps you would normally do, show them deals that weren't necessarily in their capitalization spectrum, but actually showed and portrayed the way True was thinking and the types of assets that hopefully if we got to scale, we would invest in. And that bred fantastic long-term relationships with people such as Advec and Tesco and other now global institutional funds all over the world who have thankfully backed us. But I think that upfront investment is now paying dividends in our ability to scale. And I think if I can, moving forwards, continue to apply that thought process in the way that actually we as a brand interact. I want my LPs as my customer to keep coming back, to develop a very good emotional affinity with what we develop at True. And that'll breed lifetime value and ultimately breed scalability for all of us.
Thanks for that. Maybe one more thing, the digital revolution and how that's impacted. I mean, it's obviously been interwoven into everything you've talked about, but I'm just wondering if there's any other examples, Mauro or Matt, on how you've used technology to either communicate with investors or entrepreneurs or stakeholders or using it in any other external way.
Yeah, as I mentioned before, we use technology for our internal communication. We believe that communicating and being always aligned makes the internal governance much healthier. Then we have tried to bring to the table again other new elements to communicate with our investors. We do regular webinar with them. The last one we had 60 investors connected live with us. Q&A, 1 hour and a half, 2 hours, and they get continuous update on what's happening, because also the idea that we had from the beginning was open doors for our investors. We wanted that they felt in the house, not outside the house. And then right now we are working on an app which will be launched with our new fund next year, which is dedicated to our LPs. In the app, they will have full visibility on what's happening on the NAV, their distribution and realization schedule, live feed with our investor relation team. We have 2 people dedicated to that, which again, in the interest of building a partnership and staying together long term. And then we are also thinking that potentially the syndication exercise sometimes could be speed up with some technological tools. So now we are looking at some very smart crowdfunding existing platform, if we can do something similar, but with the backing of course an asset manager, which is putting most of the capital on the table, just dedicated to our LPs. So that's the project for 2018.
Fantastic. Well, with that, I think I'd like to wrap up and just thank Matt and Mauro for their insights and sharing some of their trade secrets potentially with you. So thanks very much.
Thank you. Thank you.